Hey guys, my name is Akil Stokes, Forex trader and trading coach over at tier1trading.com, and welcome back to another midweek markup. If you guys are brand new to the YouTube channel, this is one of many videos that I put out during the week. I put up a midweek markup every Tuesday or Wednesday, a weekend trading edge video on Saturday or Sunday, with the Trader Coffee Break coming out on Thursdays, and Monday, Wednesday, Fridays, new episodes of the Trading Coach podcast. So make sure you're subscribed if you're not already. That way you don't miss the content that's coming out each week. Today's video is going to be short and sweet because I'm doing it in a morning setting instead of my normal kind of after live room, simply because I'm not going to have time today and I didn't want to go a week without getting it to you. And what we're going to look at today is a trading opportunity that's going to be on my radar for our trading day to come here on the pound yen. Now, looking at the pound yen on the dollar, if you've been following these videos for the last, month or so, we've been absolutely destroying this pair. We've been stuck in this little bit of consolidation. We've had some really good opportunities trading it up. We've had some really good opportunities trading it down. Real counter trend price action type of stuff, which is right up my alley. So I've been pretty happy with it. Now, recently we've broken out of this consolidation and we're heading towards another level of previous structure. And what we're going to be looking for here as we go down to a lower time frame is what's called a relief pattern. Now, my trading philosophy is that the what is not as important as the where. And this means that the what, which is like a double top, a rising channel, whatever kind of technical pattern you hear about out there on the internet, it's important, but what's more important is the location, where it's occurring in the market. So in my mind, I go through this process. I talked about it in this weekend's video, IPDE. Identify, predict, decide, execute, where I want to identify the location first, make a general prediction about that location, and then look for the what afterwards. And the what could be better in this situation, right? We are up at a previous level of structure. You can see if I draw a horizontal line, and we're going to be right here. But it's also important to keep in mind that we do have a higher level of structure as well. And I like to call these overlapping levels of structure. When we have these overlapping levels of structure, I tend to treat the higher level, or the one that's furthest away, the higher in this case, I tend to give it more importance than the kind of the lower part of it. So keep that in mind when you're looking at this trading opportunity. But we've just broken out of this consolidation pattern. You've seen we're on our 1, 2, 3, 4, 5, our fifth consecutive day in a row with a bullish candle. And what we're looking for is a loss of momentum. Basically, a point in the market where, we've had a lot of buying pressure breaking up. Eventually, the buying pressure is going to start to kind of dull down, right? Think about it. The best buying opportunity was at the bottom when price was cheap. As price gets more expensive, you have less and less buyers, right? Same type of supply and demand principles that work in real life. When something goes on sale in a store, more people are interested. There's more demand, right? As the price gets higher, people are less interested, and you get less buyers that way. Great book on supply and demand concepts, by the way, is Basic Economics by Thomas Sowell. It's a thick boy, big book, but it is a great book that talks about supply and demand without using one bit of math, right? So don't think you have to be a math genius to understand supply and demand. It's more about relationships. But as we go down to the 4-hour time frame, you can see that as we start to lose momentum, right, we go from kind of these sharp, deliberate moves up, and then we start having these smaller type of moves up where we're still going in the right direction, but you can see the extensions aren't as big. And this is a pattern formation called a rising channel. And what we like to pair this with is two things. We like to pair it with, obviously, structure looking left, which we have a nice level of structure over here. Again, not the best level, right? The top of the zone is going to be a little bit higher. But we do have structure there. We also have what's called divergence on the RSI. We had a good discussion on this yesterday in the live trading room about it. We had a trader who actually uses a kind of a point scale for diversion. So not just looking at the differences between your indicator down here and your price action, but it needs to fall within a certain scale. I think for him, it had to be 5 points or something like that, or five numbers, the number 5 from the initial test. So we have a rising channel, loss of momentum pattern. We have divergence, right? So these are two clues that we could be in for a little bit of relief. Now, what's important to understand is that when we talk about relief, we're not looking for a full move lower, right? We're not saying the market's gonna crash all the way back down here, but we could get a little retracement. And if we do get a retracement, where do I expect those retracements to come to? Well, the first sign is gonna be the start of this pattern right here. The low, come on, arrow key, there we go. If I can get this thing working, there we go. Right here, the low of this pattern. A second level would be the next level of structure right beneath it, which is going to be this red line. So something to look at for today on the pound yen, a bearish trading opportunity. I hope you enjoy. Before you leave, do me a favor, hit that like button, leave me a comment or question if you have anything about this video or anything in general. And also make sure you hit that subscription button if you're not subscribed already. I'm trying to hit 50,000 subscribers by January 1, and I need your help to do it. So thank you guys. Until next time, plan your trade, trade your plan. Take care.